the one stock Warren Buffett has bought in each of the past two bear markets. But before we dive into what stock that is, welcome to Financify, the #1 finance news channel. If you are interested in everything around finance, this is the place for you. If you haven't already, smash the subscribe button to stay updated with all the finance news and stay one step ahead in the finance world. Make sure to hit the like button and turn on post notification as well for us to provide you with more finance news. Okay, now let's not waste any more time. Let's get into the video. However, you might be surprised to learn that Berkshire Hathaway's 13F filings don't tell the entire story of what the Oracle of Omaha has been buying. When examining both the company's 13Fs and its quarterly operating results, only one stock has been purchased in each of the past two bear markets, the coronavirus crash of March 2020 and the current bear market. That stock is, drumroll, Berkshire Hathaway, and here's why. Prior to July 17th, 2018, Berkshire Hathaway's board of directors granted Warren Buffett and his right-hand man Charlie Munger the ability to repurchase shares if they were trading at or below 120% of book value, i.e., no more than 20% above the company's book value. For more than a half-decade leading up to July 17, 2018, Berkshire's share price never reached a level where buybacks could be made. But after amendments were passed by the board on July 17, 2018, the Oracle of Omaha and Munger had more freedom to deploy their capital to repurchase Berkshire Hathaway's Class and B shares, as long as the company has at least $30 billion in cash, cash equivalents, and U.S. Treasuries on its balance sheet, and both Buffett and Munger believe Berkshire Hathaway's share price is intrinsically inexpensive. Buybacks can be made without any cap. Seemingly making up for a lost time, Warren Buffett has presided over the repurchase of $62.1 billion worth of Berkshire Hathaway's stock in a 4-year time span. This includes $6.74 billion in cumulative buybacks during the first half of 2020 and $4.19 billion worth of buybacks in the first half of 2022. Publicly traded companies with steady or increasing net income that repurchase their common stock over time will often generate higher earnings per share as a result of having fewer shares outstanding. Fundamentally, this can make a company's shares appear more attractive to value-oriented investors. Warren Buffett continues to repurchase his company's stock during each of the two bear markets is also a testament that he's willing to bet on himself and the vast network of companies Berkshire Hathaway owns and has invested in. Many of Berkshire Hathaway's investments are in cyclical businesses that benefit from the disproportionately long amount of time the U.S. and global economy spend expanding relative to contracting. If Warren Buffett is willing to aggressively bet on himself, perhaps investors should consider following in his footsteps. We would like to mention that this is not a channel intended specifically to provide financial advice. This is merely a channel directed towards bringing educational content to your doorsteps. See you next time at the #1 finance news channel, Financify. Bye.